Hello everyone, welcome to Accounting 210 Chapter 3. In this video, we will talk about an example of Chapter 3 job costing. Basically, it focuses on the predetermined manufacturing overhead rate. Okay, so let's go to our example. That's in the textbook question 45. So for requirement, first one, I use this screen. We can, this side shows you the question, this side shows my notes. First one, compute the predetermined manufacturing overhead rate, right? In the textbook told you 4 steps. You need to find estimated manufacturing overhead, you need to find out the cost driver. And then we use the estimated manufacturing overhead divided by the estimated amount of the allocation base. So it's always the estimation when we determine the predetermined rate. Okay, so the question said, where is it? So the question said, we need to get all of the estimation for the first part. So we need to use the budget, right? We need to find out what is the manufacturing overhead. And the question also told us allocate your manufacturing overhead based on the machine hours, Okay. Both they are your estimated manufacturing overhead, and then we use estimated machine hours, right? Because the question said machine hours, okay? So this is machine hours. Sorry, my handwriting is not that good. We need to find out what are the, so we only look at this budget because that's the estimated. We need to find what belongs to the manufacturing overhead. Direct labor, no. Machine hour, no. Depreciation on sales, no. Sales, no. This is period. Indirect material, right? So that is indirect 48,500 plus depreciation on truck delivering, no. This is your delivery. This is distribution, no. Period cost. Plant and equipment, yes. That is our manufacturing overhead. We always use budget. Indirect manufacturing labor, cool, that's also our manufacturing overhead. And then what else? Customer service, no. Plant utility, yes, that is 35,900. So that is our estimated manufacturing overhead. And we need to divide by the estimated machine hours. 7,200. So if you do the math, you should, that is 194,400 divided by 7,200. So gives you $27 per machine hour. So one more machine hour will allocate $27 of our manufacturing overhead. So that is our predetermined manufacturing overhead rate. So that is our first part. Second part, asking us about allocated manufacturing overhead, right? We said that when we allocate, you use this rate, predetermined rate time actual, you time your actual base. Okay, so we already got this is 27 per machine hour. And what's the actual machine hour we used? The actual machine hour is 6,300 machine hours. So if you do that, that gives you $170,100. So we need to allocate this much. We need to allocate this much to the job. Okay, so for the rate, it's always our estimated. When you allocate, you always use the actual. Third one, compute the under-allocated or over-allocated, right? How will this be disposed of? Okay, the third one is we want to get it's under-allocated or it's over-allocated. So what should we do is most likely, I would suggest you to do a T account, manufacturing overhead. So the left side is always our actual The right side is always our allocation. So actual, then we decide all the actual, so we use the column actual, and then we add all the actual manufacturing overhead. We said that is a period, so from this indirect material will be 50,500 plus this one 72,500 plus indirect actual 42,000 plus plant utility actual 38,400. So that gives you total is 203,400. So that's the actual. That's the actual. And we only allocated how much? We allocated 170,100. So actual is more than 200,000. Allocated is only 170,000. So we actual is bigger, is larger than our allocated. So we under allocated $33,300. We want this to be zero. We want this manufacturing overhead to be zero balance because it's a temporary account. So we have to credit 33,300. We credit our manufacturing overhead 33,300. We debit cost of goods sold because we under allocated. We should have allocated 33,300 more, but we didn't. We under allocated. So now we need to adjust. We need to increase our cost of goods sold by 33,300. Okay, so that's how we take care of our under allocation. You do the adjusting journal entry or adjustment. You credit your manufacturing overhead. You debit your cost of goods sold. So you increase your cost of goods sold, and then you decrease, you credit your manufacturing overhead. So you will have a zero balance for your manufacturing overhead account. The fourth one asking you about how can the managers use this to control your overhead. I apologize, I just show you the answer directly. So it helps us to check your actual with your allocated, right? So if there is a big difference, maybe there is something wrong. That's the main thing. So you can read this solution later by yourself. But we said for the manager, we always budget and then we always control. We compare our budget with the actual. If there is a big difference, we want to check why, so we can fix the problem, and next year we can do better budget and better monitoring. Okay, so that's the whole thing for this problem. Basically, you should know how do we get the predetermined manufacturing overhead rate, and then how do we allocate our manufacturing overhead? How do we deal with the under allocation or over allocation? Okay, let me know if you have any question or suggestions. Thank you. See you next time.